Hello, guys. Hope um, I am a little late, but it's okay. It's okay. Sorry for that. So I'm trying just to see when the guys come. So I will be just waiting for a few seconds or minutes until the guys come, and then I can begin um, waiting for the guys. Hello, Jocelyn Coty. Yeah, I see your name. Thank you very much for coming. At the beginning, I should wait just a little bit until the guys come, and it's not crowded here, so it's very good that we are just few people here. And thank you very much for coming. Okay, okay. Artkov, how are you? Happy New Year! Thank you very much. Happy New Year for all of you guys. And let me see here. So I will be just waiting for a few minutes or few seconds until the guys come. Um, okay. 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 Hello, Fabian. Thank you very much for having and Happy New Year. Okay, so here we have some guys right now, so we can begin. So, first, Happy New Year 2020. And as I told you last year and the other year, um, do you remember for the guys who were here many years? Do you remember in 2018 in January? Um, I was always doing live on Saturday. And hello, Rajan Krishnan. How are you? Happy New Year. And in 2018, in January, uh, when I always don't go to see the news. I am a guy who doesn't see the news. I don't go to CNN. I don't watch TV. If I tell you that I don't watch TV, you might be astonished how a guy living in USA with all this news, he is not watching anything. Yes, I don't. Because, yes, I watch movies, yes, but for entertainment. Or documentaries, yes. But news, no. Okay? It doesn't, if something comes very, very big, it is well known, all the people we know. I know because the people talk about it. But for me, I don't follow news. So in 2018, let me introduce this because when I introduce this, you will understand why it is so important when I announce something. In 2018, I was doing always my live normal, and then one day in the 27th January, whenever I go to Facebook or to wherever, I see a lot of analysts. This astonished me. They say bye. 2018 will be the nicest, the biggest year. Just buy. And for me, Hello, Robert. Tijan, how are you? Okay. So I'm just introducing something, Robert, and then I can go to questions later. Now, 2018 in January, the stock market was doing so good in January. You see that? Now, for me, it was a trend because I don't see January. Because for me, I saw December, November, and I can show you later in the chart that this month, like November, December, January, they were good. I mean, November, December 2017. They were excellent. January 2018 was excellent. But this is the first time in my life of a trader I feel there is something wrong. You know what I did, the title of that live? I did solutions to the market crash or the stock market crash. This is the first time I spoke about crash, although I don't believe in predictions. I don't predict. But this, I felt it because I know something about analysts and mutual funds, what they do. When they say to you it's a good year, it means they will be selling because they want the people buy a lot and they sell a lot. At least they will not lose money. Understand that mutual funds, if they want to sell, the market should be strong. The days where they sell, 1 week, 2 weeks, 3 weeks, 1 month, 2 months, because they have a lot to sell and they want to let the public and the people who don't know buy a lot. And and after they get out, there is no one who push the market later, and then the people, they will wait a few days, 1 week, 2 weeks, and then they find out that there is no money, and the people began to sell. This is what happened in 2018. Now, in February, Tuesday, the next Tuesday, it means I did it on Saturday, 27. So 27, 28, 29, 30. 30 January, the market began to collapse. Okay? Now, and then each day I do video, I see what's going on, and I follow the trends and the downtrends. I follow a lot of things. Now, at the end of December 2018, in the 26th December, I see something big happening, which is a reverse of the trend. This is in 2018 at the end. And from that time, I begin to speak about a new trend in the market because I see it. A lot of people, especially my subscribers here on YouTube, since they follow me for many years, they understand when I say something, it doesn't mean I know the future, but I see something. It can stop, yes. Next week it can stop. But when I see the whole market is strong and it continues to be strong, I will say that the market is strong. It doesn't matter if it collapses later, because we are swing traders. We are following the trends. Okay, we are following the trends in the market. We are not investors to buy a good solid company and to wait 20 years in order to get profits, like Warren Buffett, like the other guys who invest for the long run. Let me drink some coffee, please. Coffee is the best thing for me. Okay? So, if you go to my channel, I was doing each day a video. I was very, very productive, but it is bad to me because when I do a lot of videos explaining the market each day, speaking about some stuff, and my channel doesn't go good with a lot of production. That's why this year, last year at the about 6 months, I stopped making videos. It's too much videos, so I want just to make little. And my students or my friends who are following me, they go to subscription and they follow me in real, okay, with our trading portfolio, with our investing portfolio, with the waiting list stocks. And this is what I want to talk to you about today. Now, what about this year? The first day in this year, which is the 2nd of January, on Thursday, the market was so strong. It begins so strong. And they understand that Friday we have the news, the thing that happened in Iraq, and this guy who's killed, and it's political news. So the market go down because of that. But I will see next week if the reaction continues, yes or no. Because understand that news is just sudden, that comes very, very quick. It doesn't last long. That's why it is called the news. And most of the people who follow news are day traders. Now, if you are day traders, you should be aware and you should have a good means of news in the morning, at midday or at noon or in the afternoon. You should be aware of this stuff. Earning news, okay? So you are always aware. In order to make some bucks, you should follow the news very, 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 very good. But for us, as swing traders, I don't use news in my trading strategies. Why? Because news are unpredictable. Unpredictable, I will give you an example. Let's say in this January we will have a lot of earning news, like Apple, like Facebook, like Twitter, like a lot of stocks. And each day we have a lot of earning news. If you go to Yahoo Calendar, you will see that sometimes we have 15, 20 stocks in one day. So these stocks, day traders, they follow them because they trade them. After the market close, they begin to look at these stocks. And any movement, if they begin to show volume and they see where the stock is going up, they go and they buy. So they make some bucks until 8 o'clock. Because understand that day traders, you can work from 4 a.m. in the morning until 8 p.m. in the afternoon. So understand that. Some people of you, maybe because you are not day traders, you don't know. You think that it is just 9:30 to 4 o'clock. This is the trading where all the people come. But day traders, they are everywhere. And whenever the market is open, they are there, waiting for something. Okay? That's why you see gap up. Who makes the gap up? When you see a gap up, for example, the stock today is $20, tomorrow you find it 40. Who changed the stock from 20 to 40? It is the day traders. There are some maybe swing traders who follow the news. Yes, they can buy, they can wait for many days, yes. But understand that day traders, they don't hold position overnight. Understand that. Because it is risky. A day trader, he trades what he sees. He doesn't trade something at night after 8 p.m. because he will never know what will happen. He has no means to see what's going on in the morning. Maybe something bad happened. He will not exit the trade very easily. He gets caught. Especially for those who sell short. Let's say let's say a stock was $100. The earning news after the market closed at 4 o'clock. At 5 o'clock, the company announced bad news about the company earnings. This quarter is bad compared to last year quarter. So what will happen? Day traders, they come, and hedge funds, and they sell short. Now when they sell short, let's say it is 100, let's say it goes to $85. It means the stock lost $15. But those guys, they should exit the trade before 8 p.m. So it is 7:59, no one stays. Okay? Excuse me, sorry. There is a lot of raining here. There is no snow, but a lot of raining. I may catch a flu or something. So you see that? So as I told you, when the day trader or hedge funds, they sell short before the whole market close for sure, which is 8 o'clock p.m. This is called after hours trading. Only the people who know what they are doing, the advanced day traders, the hedge funds, those guys who come at this time because they know what they are doing. Okay? Because selling short, for example, is selling other people, selling the investors shares. Okay? And at the end of the day, they will buy them again with a profit. So, for this year, the first day, which is 2nd of January, on Thursday, was excellent. On Friday, it means yesterday, the market goes down a little bit. It's just because of the news, you know, the political news in Middle East. Now, we will see next week. If next week is strong, it continues to be strong, and everything is going up, you will begin to see a new trend forming in the future. Okay? And understand that when I say the market will be strong, it doesn't mean 100%. But why is that? Why some stocks go up, the others they go down? Always I have this question, but the question is very simple to answer. Because if you understand how the market is working, you will understand that these things are very, very simple. It's very simple to explain. The thing is, mutual funds who hold more than 40% of the whole market, because they are the big buyers in the market, and they are the big sellers. If they sell, the whole market will shake. When they sell, you will have the big correction in the market. You will have a downtrend. Okay? And if the other investors follow, there will be a bad year like 2008. 2018 was a bad year, but it is not that much. It's not a big deal. Because at the end of the year, in 26 December, the market was very strong, and the year, it doesn't last that much in 2018. Okay? 2019 was excellent in the first month, and I was following that with Saturday Live, and I put some videos, and I was following. When things happen, I will show a lot of things I have explained, and it's very good that people who are following me for many years, they understand everything in the market, and they don't go through things anymore like before. Before, when there is when there is something, they try to know why, what is the cause, why this stock goes up, why this cause goes down. But this questions is useless. Okay? Some people, they say to me, oh, that stock has a gap up. I say, yes, good. Were you there? I say, no, I just see it in the news. So, if you are not in the stock when it is a gap up, so why you are searching for it? Are you hoping that you go in the past and you buy it and then you have the gap up? Okay? And it's the same with the gap down. When the market because of the news, the stock goes down, and you say, oh, that stock goes 15%, 20 or 30% or 90%. Oh, I say, it's too bad. Are you there? You say no. So these are all news for entertainment. That's why I told you guys, if you are a day trader, if you are a day trader, yes, but you follow the news for the stocks that you are working on, okay, or you are interested to trade, so you be prepared. Okay, if there is something beforehand, it is known, like the earning news. Earning news is known. Okay, so it's not something that it is hidden. The company announces, okay, next Thursday after the market close, we will announce our quarter earnings news. So everybody knows the date. So the day trader are waiting for that stock, for that moment, and prepared what to do, either to go long or to sell short. It means they are prepared. They have their money ready, and understand that these people are very quick. They enter, they buy, they sell, they can wait, they can, until they make money, they can do it again if they are wrong. It means they are very, very active traders, and they have money. It's not with 2,000 or 5,000 that you can be a day trader and you buy something and then you can't, when you sell, you can't buy again because of this thing. You know, it will become very, very hard for people who have no money, little money. And this thing, you should have some money. Okay? Now, for swing traders like us, it means people who follow the trends. You don't need, but you will be aware of the news. For example, the earning news, I always tell my subscribers for the stocks that we own or the stocks in the trading, especially in trading, we trade. I always tell the people, oh, okay, this week, let's say Monday, after the market close, Facebook, for example, it will have the earning news. So if you own Facebook, you should decide what to do. I can explain to you what are your options, but I can't tell you what to do. Do you understand? Because trading is a responsibility. It means you be responsible for your money. There is no one who will help you. It's like you do a job, okay? Someone can help you find a job. He can help you with someone. You say, oh, this guy is my friend and he's excellent in this thing and this thing, and he has skills. He is my best friend and he needs a job. Can you hire him? Yes, you can help someone getting the job. But when this guy goes to the job, it is his responsibility to be punctual, to do good, to not to be lazy, and to show that he is a good worker. I can't help my friend to have a job and then I work for him. It means I work in his place. I can't. So you understand? This is about trading. In the news, when the news is coming for a stock, this is, I tell you, guys who don't know. Let's say you buy a stock last week or last month, and you are in a trend. The stock is good, you are making money. You see the money, you are making money. Okay? So what else you should do? The thing that you should do first is you should see where is the earning news date. When? And then you try to see if you can exit, if you have a lot of money, because you will never know if it is a gap up or gap down. Sometimes it is not nothing. Sometimes the traders, they are not interested in the stock, so the stock doesn't go up too much, doesn't go down too much. You know, some traders, sometimes they get fed up with some stocks. They don't. So for you guys, you should know this. You should understand this idea of earning news, because it is so important for you. Sometimes you are in a stock, you make money for 1 month, 2 months, 3 months, and then there is a gap down. It means there is the news. You don't know that there is a news, because no one tells you or teaches you that you should see this stuff. What will happen to you? Sometimes you lose your profits and you lose some of your money. And then you will have a bad experience in trading. And then you say to yourself, I wish I have exit before the earnings. I wish. Or at least I have sold half and take my profit, half of my profit, and left half of the shares. Or if you want to leave everything, it means you have more risk to take. Okay? You have more risk to take. So understand that you are going through a risk, a very large risk. So if you have a gap up, for example, understand that it is a bonus for you. You have the trend, you have make money from the trend, and then you have a gap up. Sometimes it happens to me, and I exit on the gap up in the morning. I see where the stock goes, and I exit. I don't want to stay anymore, because the gap up, sometimes like Facebook or Twitter, Facebook, Apple, Twitter, or whatever stock I use stocks that are 100, 200, 300. These kind of stocks I like. So when you get $15, $20, $30 in one day, plus you have $40 or $50 profit from the trend, or 60 or whatever, it's a lot of money. So when you exit, you will have all your money in your account. That is a good trade. And in the year, you don't need to trade thousands of stocks. You need just a few trades that are good, and then you make money. That's it in swing trading. That's why like swing trading, it's not like day trading. Day trading, in order to make money, you should be there. You should be daily there in order to trade. It's a job. It's like someone who works from Monday to Friday, like a bank job. Like banks. You work from 9 to 5 or to 4. So a day trader is like that. You know, you work in the market, you see the news. You can work even 2 hours or 1 hour, 3 hours. You make money, and that's it. It doesn't mean that you should stay the whole day waiting for profits. No, you can work when the volatility are too much, like in the 2 hours in the morning, and then you can just be aware if there is any another opportunity to buy. If there is no, that's it. Okay, so it's not like swing trading. Guys, I see that you have written some questions. Now I want just to finish what I am trying to say, and then we can go to your questions and ask, and I will answer your questions. So thank you, Krishnan. Thank you, Robert, for your questions, and Omar Dermisioglu, he deleted his message. I don't know why. So just write, Omar. Just write your questions. I will answer whatever questions that you have about trading and investing. And Robert Tijan, you have written some questions, and I will go through it later. So let's because we always speak about stocks, about indexes, about mutual funds, about a lot of stuff. And what we are doing in my subscription, we have three kind of subscription that I'm using. One is basic, one is silver, and the golden. Now, what we are doing a search weekly. No, this is a training for you, because each week you get to see how I search, what kind of stocks I choose, which industries, what sectors, how I choose, what price. It means I will show you all the criteria in order to get the raw stocks. It means to get the list. And then you put this list into a chart, and then you begin screening. It means you begin scanning for true, stock by stock. See the chart. Does it has all the criteria that we know about a good stock? Yes, it's a buy. Okay? It's as easy as that. It's a buy. That's it. Now, when you buy, before you buy, you should see the earning news. When? Because if the earning news is last week and the stock is going up, it means that this 3 months, it could be a very good trend. Because most of the time, when there is a gap up, not all the time, okay? Most of the time, when there is a gap up and the stock continues to go up, it means that the people, they like the company. They like the stock. Some people, they come to invest. Some people, like swing traders, they buy. Day traders, they come to this stock because they see it's strong. So they always at 9:30 they buy this stock, because they know that most of the time it goes up and they can make money easily. Okay? So this is the first thing we do each week. So I do a weekly search, and I ask the guys who are watching me, like in my students, I ask them, if you have questions, whatever questions you have about these stocks or your stocks or whatever, just send it to me, and I make videos with explanation. Because most of I am talking about is explained in my training. Okay? Most of what I'm talking about is in my training, because for me, I want to train students to be independent. This is what I am doing. I am not asking you to follow me 100 years. No, just follow me until you understand everything, and then we become friends. Now, each 1 week or 2 or 1 month, you tell me, oh, okay, I did this. What do you think? I have friends for many years, and they are not in my subscription. They have already bought my training, but they are following. If there is any news, or there is something that they don't understand, or something new in my strategies they want to know, so I most of the time give them for free. So because they are my friends, and they are my students, like older students, so I just have them as friends. Okay, so it doesn't mean that when you subscribe, it means that you are going to follow me for many years. And I give you everything. It means for my training, I give always everything. It means I don't do like others, give what we call stock picks, and say, oh, this they go up. I don't know if they go up or not. So there are strategies how to deal with them. Okay? And we have the trading account. Trading account, I have made it last year in April when the market go down. It's just because I don't have a virtual account to use it for my students, and it should be reliable. I don't. Before, I was with Option House, and they have one, but at that time I did not make a trading account. I do search, but I don't. Now, in 2019, last year, I want to do, but I was with E-Trade. E-Trade bought Options House. So they delete the virtual account, which is demo account. They deleted it. So I called them, I say, yes, you have bought Option House, and I was with Option House. They give me the same thing, like I think it's $3.95. Before it was $2.95, but I closed my account the first year because I lost money in 2010, and then I opened it again. So there is a change in commission. Now, last year in April, E-Trade introduced again the virtual account. Okay? So when they introduce it, I say it's an opportunity to make another one. But the problem when I begin, the market collapsed. At the time, we have a downtrend. Okay? So we begin just to trade here and there, and I begin to lose money. But after that, I make my money back. So E-Trade introduced the demo account, and if you are with E-Trade, you have this demo. You can, if you don't want to trade your real money, you can do that. So what do you do in this trading? I will show you how I choose my stocks, like the search, how I find stocks, and how I buy, why I buy at that day, because I am very, very specific in buying. I follow my rules. If I don't follow my rules, I will do mistakes. So I follow the rules that I put myself. Because if I don't follow them, it means why I have strategy in the first place. Okay? So what we do is, you see me trading in real. It means when I put videos, I say, okay, today I have bought Facebook at this price. Now, I will give you the reasons why I buy today, at what time I bought. You can check that. I will show you the time. I will show you the order. It means everything is clear. So the people who are following me, they see when I make money, and they see when I lose money. Now, when I make money, I say why I make money. If I lose money, I say why I lose money. And understand that making money and losing money is part of the game. So anyone who is frustrated because he lost $200 or $100 or $1,000, I think trading is not for him, because you should accept the market thing. Okay? You should accept and continue. Don't argue with the market or with the price of a stock. Don't argue, because it is the real thing. Okay? Some people, they don't believe. For me, I always have, most of the time, I have gap ups and I have gap down also. But when I have gap down, I will be happy. Do you know why? Although I lost money, but I will be happy. I say, okay, I got a gap down. Okay, next time I will get a gap up. Because stocks, they change. Sometimes they have gap ups, sometimes gap downs. So always, if you are swing trader and you stay you will see all that stuff. One time I bought stock. Today, at that time, I don't check. It was not the earning news. I rarely see at that time. It means my strategies change for the better, because there are things that before I don't take care of, and then I see that they are very, very important, like the earning news. I bought it today with $75. I still remember the name of the stock, which is called ANAC, ANAC. I don't know what happened to this stock. It's many years ago. $75. Tomorrow it doubled to 135. Now in the morning, when I opened my account, do you understand that when you have the whole account, it's the riskiest thing you can do. You put the whole account in one stock. I don't do this anymore. Okay? I do it in investing, yes, but investing I put a lot of stocks. But in trading, it's the riskiest thing you can do. But it is the most profitable thing you can do. But it is risky. So at the time I was doing risky things. So when you see your account, whatever is your account, if it's 10,000, 100,000, 50,000, 200,000, 1 million, whatever is your account, and you put it in one stock and tomorrow you see it doubled, that is something that you can't believe. It's so big. It's not penny stock that it is $1 tomorrow it will become $2 and you double your. This is most of the people they do, but sometimes they do good, sometimes they lose all their money. It's a bit gambling. But for bigger stocks, it's hard. It's hard just to buy today, tomorrow you'll double your money. This is not a lot in the stock market. Okay, so the thing is that trading account, we always expose the stocks, and I will show you why I stay 1 month, 2 months, 3 months, 6 months, 1 year. For example, right now we have stocks that we have 2 months, 3 months, 4 months. Why I didn't exit? It's just because the stock is good. It doesn't show any weakness. But sometimes when it shows a weakness, I have skills, techniques to do. If I see the stock is weak, I decide when to exit. When it comes to that price, I exit. But the thing is, if this stock comes back again to the price that I want to buy, I buy it again. So for me, there is no psychological problems of buying and selling. There is none. For me, a trade is just a trade. It is not related to me as an attachment, like when you love a stock or you hate a stock. For me, I don't. Yes, I like a stock that gives me money when it has a gap up or when it has a long trend. Yes, I like that. But I don't love it like a person. Okay, I love a person. No, I don't love stocks. I like them, but I don't love them. Because they can hurt me one time. I love a stock, and then I have a gap down. It hurts me. So this love and hate, you should take it from your psychological mindset. Mindset is, it's just what the people say here about women. So do this, but this is not for women. Okay, I'm sorry for women, but this is what the people here see. What the people say here: date a woman and never marry her. It means you should be stingy when you are in the stock market. You should be the most stingy person in the stock market when trading. But when you are in real life, you should be the opposite. Because when you go to the stock market, either you take money from the market because you are a good trader, or they take your money. That's it. And you don't know your opponent, someone who takes your money, or people takes more. Maybe he is your neighbor, he is trading and he is shorting the stock, he makes money, and you are going long and you lose money, and in the morning you say hi, and you are okay, but you don't know that he is the guy who short the stock because you will strangle him if you lose a lot of money. You see that? So try to make stocks like objects. It means things that we use in order. It's a vehicle to make money. but it is not something that you love, like a person, or you hate. Even if you lose money, understand that most of the time it's your mistake. You don't know how to trade, or you stay in a downtrend too much, or there is a gap down. You understand that you are responsible for that. Okay, so you should be responsible for your trades. Now, and you see, the good thing about my account is that people, they see everything. They see what I bought. They can check on their chart to see if I am telling the truth. If I say, for example, oh, yesterday I bought Facebook at $70, and today it is $100. Oh, I make money. And they say to me, okay, have you made a video showing us that you bought the stock? Yes or no? If I say no, it means who believe you. But for me, fortunately, I try to be transparent, to show the things that I have done, especially when it is done in the same day. At least, guys, they can verify, they can go to the chart and see what I see. Okay? I don't do like others who just buy stocks and they invest and they say this is trading. This is not trading. Because investing, it depends on the market, the whole market thing. Okay? Now, this is about trading account. It can go down, it can go up. And this you can see it each week. So each week it gives you, it's better than 1 month. 1 month is too much for trading. But each week, sometimes a week, I don't do nothing. That's why the people, they are always astonished. They say, Kareem, what do you do in the whole week if you take only 10 minutes or 15 minutes a week? Just you buy stock, it goes up, for example, you stay 1 month or 2 or 3. What do you do? Okay, I do nothing. So some people are always astonished. They think that I should be looking for the news the whole day, checking what the analysts say about my stocks, going here and there, going to CNN, see what is the whole market doing. What is this that you are doing? You are just wasting your time. Whenever you go to a TV or to a website of news, what are you doing? You are just wasting your time. If you want to understand something because you invest in a stock, you invest in a company, and you see that it's doing good, you go to search to dig why it is doing good. What is about this company that is doing good that you are investing in? Okay? This is good when you are an investor. Okay? You are following your stocks. It's very good. Each week or each investor, most of the time, you should check every 3 months and you do an analysis. Each 3 months. Not every day. Okay? Don't be like a fool, like a crazy person. You are not a day trader to check every day. So the company announces its quarter 4 times a year. So each 3 months you should see what your company has done. Okay? This is the good thing. If your company is doing good and the earnings is good, your dividend, they give you more dividend, so you are making a good investment. Because an investment, it should go up. More dividend, more earnings, the company becomes bigger and bigger and bigger. The price should be becoming bigger and bigger and bigger. Okay? That's why you need time. Some years, 1 year or 2, it is too bad because all the market is going to be bad. So don't worry about this. Worry a lot about your company when the industry is doing good and your company is not doing good. And I always give an example of GE, General Electric. in 2018, not last year, the other year, 2018. I watch a lot, what is it called? Dow Jones, because I make videos. So each week I show them the stocks and say what's going on, and then I remark something. I notice something in the stocks, because when I see a stock, even though I am not an investor, it means I have some investment, but I am not investing that much. But I noticed that GE is going down. Each month is going down in 2018. And it is with Dow Jones. It means one of the biggest and oldest companies in America. But I tell guys, if you go to my videos, if you go to my live in 2018, in February, March, April, May, whenever I show Dow Jones stocks, I show GE and I say this stock is having something bad. Believe it or not, in June 2018, they kicked this company out after 110 years staying with Dow Jones, which is the biggest index in the world in terms of 30 biggest companies in the world. Okay? So, do you see why when I see something, I understand, although I have never seen fundamentals of GE. I have never gone to the company fundamentals to see the earnings, but I see the stock, I understand that it has a problem. So you see that? It means it's like when you see someone, his face is pale, and he is weak, and he is coughing. You understand that he is sick, and he has something going on in his body. He's not doing very well. Without knowing this person, it means even a person that you see in the street. And when you see a good guy or a good woman, she's strong, she walks good, it might be that 100% she is in good health, or he is in good health and successful and the other stuff. So you see that? So that's why I always tell my students is that for me, the price is everything. They told you some road books, they are very famous. They tell you, oh, no, it's not the price, it's the value. It's man. See, if a stock was $100, now it is $2, and you tell me that this company has a value and it has a reputation and it has a good competition. No. I will not put any dollar in this company. If you say invest, if you give me shares from this company, like you say, Karim, I have a bad stock, a bad company, I invested for 10 years, but I put $100,000. I lost $90,000 because it was 100, now it is only $10. Now, Karim, I will give you this $10,000 in shares for this company and just take them. Do you know what I do when I get them? What do you think I do? The first thing I do, I sell these shares and I put them in another good company. Do not invest in companies that lose money. When you see a company is losing money for a long time and you see that all the companies are doing good, understand that why the price is going down. Okay? The price is going down because mutual funds are selling. They want to get rid of this company. Why? Because they have analysts, they have detectives. Do you know that there are some analysts? They dig into the company. It means they know a lot about fundamentals. It means not like me. For me, I am not a guy who understands inside the company stuff and the other. No. But for me, I have just some criteria. The criteria that I use is, for me, is everything. I don't need more. the first thing I see in a company is the price. Where the price is going? Is it going up or is it going down? If it is going up, I see other things. I see the reputation of the company. I see competition. Like Warren Buffett said, this company, do you think it has a future in 5 years, 10 years, 20 years? Do you think it has a future? Because things change, okay? And I can give you an example. Before, in the 90s, the cell phone that we have, most of the time it's BlackBerry. I think from Canada. I'm not sure, but I think it's from Canada. But when Apple comes and they begin with smartphones and Samsung, this company collapses. Okay? So sometimes when there is a change in technology, companies, they collapse. And I followed, for example, Sears and JCPenney, two big companies that they collapse. Okay? They don't exist anymore. I think they are out. They are in penny stocks or in the second market. They don't exist anymore. And they are sold to some others. So you understand? And I showed these two companies before for my guys, and I tell them, before I used to trade them a lot. Sears, it goes to $195. Now it doesn't exist. It is in the second market, the OTC, over-the-counter companies. Over-the-counter companies. It means it's not listed anymore in the big three exchanges of USA. It's in the black market because it collapsed. And I showed why they collapse. The prices are going down, going down, going down, going down. And you, guys, this is good for you if you have an investment. If you have a 401k, for example. Okay? 401k. Try to go there and see. Because I taught a lot of people like in person. And I say, the first thing I ask, do you trade? How long have you been trading? What you know about trading? What kind of trading do you like? Do you have an investment? I always say yes. I say, what kind of investment? Is it 401k or something else? And how do you invest if you are alone? I find mistakes and I try to give them suggestions and my opinion. But when they go and they check, they will be astonished that they are ripped off all their life. You find someone that all his money from the managers of the 401k, because understand, these guys, no one tells you they are professional. They are not. They do what they are asked to do. For example, if you go to your 401k, go and check, have you changed the selection of mutual funds? Yes or no? If you did not change, most of the time, you will find they put your money into what they like. And most of these mutual funds, they are failure. The managers are losing money. So all the company people, they throw their money there in order, because when they buy, the stock can go up a little bit, but it's of no use, because in the market, they know when they see these mutual funds. If they are bad, they don't buy them. So just take a look. If you have an investment, any investment, just take a look. And you will be surprised that your money is put into a bad investment. Now, I will give you an example. If they give you, for example, 20 mutual funds, go and check what is the mutual fund that they are putting your money in, because they put it in percentage. You can change it. They don't ask you anything. If you don't know, call them. Enter to your account, because some people, they don't know even to go to their broker account of the mutual funds. It means their 401k. This is crazy. How can your retirement, you don't know the money where it is invested? Okay? So you should handle this by yourself. Don't let anyone plays the professional. Because these guys, they put your money into what they like or what they ask to. But you can change. They say nothing. Okay? Now, this is just a suggestion. If you have 401k, just check it. If you check it and you find something, you can contact me by email and you say, Kareem, I find this and this. What do you think? I can give you my opinion. Because you should do that by yourself. Okay? You should see what's going on. Especially when you are either you are young or you are old. It's the same thing. But when you are older, it's more important to see than the younger ones, because younger ones, they can change later. But older ones, if you are 50, 55, 60, all your money has been thrown to some rubbish mutual funds that they are not doing well. Now, another thing. See how much money you make in these 10 years, 20 years. They will show it to you from inception. From the beginning, when you put, let's say you work in a company for 20 years. You can see how much you put as a contribution. You can see how much your company put. You can see how much money you make. If in 20 years you make 5%, 10%, this is stupid. This is stupid. Take for example Dow Jones as an example, or S&P 500. S&P 500 is the most used in comparing things. See this ETF, for example, SPY, which is the ETF, which is the stock that attracts the index for Standard & Poor's 500, which is called S&P 500. Now, look how much this stock has made in percentage. Let's say it was 100 in 10 years. Now it is 200 or 300. If the whole market has made 100% to 200% in these 10 years, how can you make 10%? And they say to you, oh, you are a winner, you are making money. No, you are not making money. They rip you off. All your money, they took it off. They put it in a wrong investment. That's why you are losing money. Another thing that I want you to see when you see mutual funds, you have the index. Search, you can go inside and see how much each year this index is making. Compare it with another index that you are not, for example, you are not invested in. If you see other indexes that are good, you can change the percentage. If they put 50% in one crazy mutual fund that lose money, you can just give it 10% or give you 0. No one will tell you anything. This is because you take control of your money. Don't let other people and they will say, we take care of your money, just to sleep. Okay? Have you ever, when you take your paycheck, you give to someone else and you say to him, okay, I want just to pay rent and to pay bills and give me $10 or I buy some snack, or is this what you are doing? No. You will never give your money to someone else to spend it or to show you how to spend it. This is personal. So when you are building your wealth, you should do it yourself and you should check what's wrong. Because if you don't see, believe it, yes or no, most of Americans, they get ripped off from this investment. Hello, Charles Mary, how are you? So this is just a general thing about investment, and I say you to something you can check. Each mutual fund, it has an index, it has a symbol. You can check the performance. You can see how much you make from this one. You can compare it to indexes, to Dow Jones or to S&P 500 and see what's going on. Okay? Now, there are some options also. I think some companies, they provide their company stock. They ask you if you want to buy their company stock. If you see that your company, the stock is doing good, it's better to invest some money in your company stock. Don't put too much, but you should. Because if your company is $10, after a few days, no, not a few days, after a few years, from 10 it's going to 40. No, your company is better than the other investment you do. So why you put all your money into losers and you leave your company that's doing good? Because you know your company better than anyone else. You know the competition. You know the company is doing better than the others. You see the price of your stock. Is it doing good or bad? Okay? So this is one thing. Another thing I want to tell you about investment is that some people invest through the bank. This is a no. Or some kind of what is it called? Some plans that they tell you, oh, just send us $100 and we buy your stock, shares, and you build wealth. No. One time I get interested in this. I don't know what's their name. If you know the name, you should tell me. It is brokers. They ask you if you want to invest in companies. You just, they take some money from your paycheck each time and they invest for you. You tell them which stocks and they invest for you. This is a no. Here is the thing. I go to their website. It's a broker. Most of the times they are banks or they are brokers. Okay. Let's say they take $100 or $200, depending on how much you make. Let's say they take $100. They deduct it from your paycheck. Each paycheck, it goes to your portfolio. Okay? Now, here is the thing. They will add fees that it is a rip-off. When I go to check the fees, I really don't understand until I call them. I find 5 or 6 fees. $10 is this. $2 is this. $1 is this. $5 is this. Okay. They take around, according to their example, I see the fees. If you put 100, they take $20 or $25. This is just fees. It means they rip you off. And understand that when you go to their plan, you sign papers that there are fees, but you don't know what there are fees because you didn't ask. And whenever you want to speak about fees, you find a lot of agents. They say to you, it's nothing. They can give you one fee. It's like, it's just 50 cents. 50 cents in every paycheck. This is the fees, but it is not. You go to your account, see it before they take money from a paycheck, and after a few days, see what they put as an investment. You will find they rip you off. I find someone who who has an excellent job. He's doing 3 figures. He's a very successful person. He has a lot of money, and he uses his bank to invest. Now, I told him, man, are you investing in the bank through the bank? He said, yes. I say to him, it's a wrong idea. He told me why. I told him there is fees. He told me, yes, it could be something, but no. I say, it's not something. It's a big thing. And I tell him to go check his account, check how much money they take each time. And whenever he discovers that, he comes back after a few days, and he told me that all these years they took thousands and thousands of dollars from his money. But it was his mistake. Now he stopped this investment. Okay? And if he continues, they will ask him more money as what is it called? Management fees and the other fees and the other fees. So you will be. They will take your they will take from your money whatever they like. Especially when the market is good. The market is making 25%. They can take 10% from your money, and they put it in through fees. They can do that, and it's very, very hard to follow these banks. Why you take this? Why you take this? It's too much. It means you accept and you sign that there are fees, there are market disclosures. There are a lot of things that you sign. When you sign, it's over. It means that you accept, but you don't know what you have accepted for. It means you sign, and don't take into account what they say, because what they say is not written. Okay? If you talk to someone, he should take you the paper, and you should ask him, what's this? What's this? What's this? What's this? Okay? You should understand everything. But if you like it, you stay. But for me, I will never give my money to someone to play with. Okay? Banks, brokers, no. Yes, I trade myself, I invest myself, yes. Because I know what I am doing. I see, when you invest by yourself, let's say you have an account like a Roth IRA. Okay? Let's say you have a Roth IRA and you want to put some thousands each year, and for 20 years, 30 years. If you invest like this, no one asks you for fees, because the Roth IRA doesn't ask for fees. There is no fees, management fees or so. You just buy the stock that you like, the company that you like. Each 2 months, 3 months, 6 months, or each year when you have tax return, you take this money and you buy stocks. That's it. So easy. There is no fees. Why you go to the bank and you give them your money and they rip you off? It's logical. It's logical that you are doing mistakes. So understand that in matters of money, you are the responsible one. Don't let anyone be responsible for your money, because, especially retirement. Because when you are 60 or 65, you want to retire. And when you see the money, it is not the real money that you should have if you have invested yourself, because there are no fees. Fees are too much from the banks, from brokers also. There are some kinds of plans they do, and it's bad. Okay? Now, the other thing we do in subscription, especially golden subscription, we do investing. I invested $100,000, which is the what is it called? The virtual account. From April, we invested in some companies. If you go to golden subscription, you will find them. Each week I do a review, and I will say what's good, what's bad, and we explain. And we have the last thing we have in our Subscription is what we call a waiting list or updates. So we update stocks, we put in the list because there are things you can't search by. That's why in my training level 2, how to search for stocks using stock screener, this is you search for every day. You can search whenever you need stocks, you search. But there is another search, you can't scan them. There is no scan that do them because they are hard. You should need techniques, and you should put list of stocks that you like, and then you follow my techniques in order to buy these stocks. And most of the time, you buy them either from the bottom, from the support line, or you buy them from the resistance line. So it is very hard. So you need to have a waiting list. So we have a waiting list, and I add stocks. Sometimes I delete stocks. And whenever a stock is good, I say to the people, this is good if you want to buy. It's just to help other people. But everything is done by choice and by decision. Okay, now I finished all what I want to say in this session, which I speak too much. I speak 1 hour 16 minutes. So let's see. Guys, thank you very much for listening all the time. Omar Demir Sioglu, please, you have written a message but you deleted it. You can write your message, or you send me an email. Robert Tijon said, this is a lot of money on the sideline. Saving money with a low interest rate gives no money, so the people buy stocks. They have no choice. Yes, for me, I don't like bonds. Interest rate and bonds, you give your money to the government, or you give your money to wherever, and they give you 5% or 2%, 3%. This is not a good investment. And according to statistics, if you take our stock market in 150 years, you will find that stocks are the most performing thing in the whole market. There is no better than stocks. That's why Warren Buffett invests in stocks. He doesn't invest in mutual funds, because mutual funds, what they do, they are managers. They buy stocks, put them into a fund. That's it. You can do the same. So why you buy a mutual fund? You can do the same as them. For example, Warren Buffett has made his fund by himself. That's it. And he succeeded. He uses stocks because they give dividend. Now, dividend, when you get them, you can buy more stocks. Okay? So you can sell, you can buy. No one obliges you to keep a loser. Okay? So, hello all guys. And then you say interest rate gives no money, so the people buy stocks. They have no choice. No, listen, the choice, stock market is not the only thing that you can make money. You can make money in other ways, in doing business. You start a business, if you make money, that's it. But investment in stocks is a good thing, because in the long run, there are years that are good. You can make a lot of money. There are years that you lose some money of this profit, but it's good. And then these stocks will come back and you make money. So, for the long run, investment is the best choice. Okay? So it is the best choice. There is no other choice. Even if you want to do real estate, without being obliged, as they say, to buy rental things and to make money, and you can do that if you have the skills, if you know the market, if you know how to buy investment. If you have some money, if you are good in the market, you know what you are doing. But in 2008, the real estate collapse. People who have a lot of investment, they lost everything. The banks, they go bankrupt. Why? Because when there is an economic problem, in stocks you can sell. You can take your money, they are in the bank. No one will touch them. But when you buy an investment, 200,000, half a million, 1 million, you buy a complex, you rent, and then something happened and there is no customers and you can't handle that and you begin to lose money. And there is a bad year and you lose your investment, 1 million, and you lose it. You will have no money. And if you want to sell, you can't sell because the whole market collapsed. This is what happened. Okay? Except when you sell before the others. But this it will never happen. Okay? Now, if you want to do real estate or gold companies, you can buy gold mines companies. You can or silver or any gold companies, or you can do real estate, because real estate companies, what they do, they buy, they invest, they rent, they sell. Okay? So you are doing a good thing from the stock market, but you don't involve yourself into the management. Because the management, if you want to do so, you should be knowledgeable. You should know, you should have skills. How to buy, where to buy, what are the opportunities. You should learn all this. It's not easy. Don't go to a YouTube channel and they say flip houses. Man, flip houses. You know, sometimes you want to flip a house, they flip you. And you lose your shirt there. Okay? So it's better. Stock market for me is better thing. Now, Robert, you has another question. Teacher, are you trading in the aftermarket? I see that the game is played in the aftermarket and pre-market. Is that different skills? Now, listen, I have spoken about this, Robert, but I think you come late. If you come early, I have spoken about this. I have spoken about day traders. I am not a day trader. And understand that before the market or after the market, when we have news, especially earning news, now this thing, earning news, it is less than a second and the price has changed from 10 to 15 or from 100 to 120. You can't go and be fast as them. So, but you can do after. So you should be a day trader. For me, why I am not a day trader? I was a day trader before. Because it takes me time. I don't want to waste my time waiting to be looking at the screen for a long time. I don't want to. In swing trading, I do search for 5 or 10 minutes if I want to buy a stock. If I don't find today good stock what I want, I do it tomorrow. And I don't sell all my stocks in one day. It's rare. It's except when there is a big correction in the market. Okay? So let's say I have 10 stocks. An example, okay? I have 10 stocks. Let's say one stock, I sold it, either with a profit or with a loss. So that stock I will replace. That's it. Why should I sell the others? That's why when I tell people that if you follow the trend, it takes you 1 month, 2 months, 3 months, 6 months, 8 months. It depends. So you are not obliged to be a day trader. But if you like day trading, you should do day trading. You should follow the news, whatever is the news. Sometimes the news come, political news, at 10 o'clock, at 5 o'clock, in the morning, in the afternoon, at night. It depends when the news come. When the news come, especially when the market is open, you just go to stocks and see what is the stock that moves the fast, and you can make some bucks. This is what day traders do. But for me, I am not going to waste my time watching TV and watching news and following stocks. Stocks, there are a lot. Okay? So for me, I don't do that. But some day traders, they do it. They like it. They like action. And some, they make groups. They make groups. You can even if you have a friend, 2 friends or 3 friends, you have two laptops or one computer. We have 3 or 2 or 1 or whatever, and you can trade together. You see a stock here is doing good. You say, oh, there is a stock here. It's going up. Just buy like this. You can work with your friends if you want to. But it needs people who are alert to news. Because you should watch what you are buying, what you are selling. It's not something you buy and then you go to a restaurant to have your food, then come back and leave your trade. This is not gonna happen. This is not a way day trade. A day trade, you should be there. You put your coffee, put your food near. You begin to trade. You should not leave your screen for half an hour, 1 hour, 2 hours, 3 hours, until you make your money. If you lose, you just exit and find another stock. So it is about action. If you are an action guy, you should do day trading. If you are lazy like me, you should do swing trading. If you are the most lazy person on earth, you should do investing. So it depends. It depends who you are. What is your mindset? Are you into very, very big actions? You do day trading. So this is my suggestions. Charles Mary 31, hi, how are you? Jocelyn Cote, you say not to invest through banks, but the fees I pay per trade is 9.99. Is this too much? Yes, Jocelyn, in Canada, it's a bit pricey. Here in USA, I see that most now they change. I think in November and December, most of the brokers, they drop commission. I see it in everywhere. I don't know if it is all brokers, but a lot of students, they told me a lot of brokers are now free commission. So if you are buying $9.99, you should not trade too much, except when you have a big account. When you have a big account, like 50,000, 100,000, when you trade more, it doesn't affect you that much. But if you have just little money, 2,000 or 5,000, and you do a lot of trades, that is bad. So you should just calculate. How many trades you want to do. Let's say you do 4 trades a month. 4 trades, what does it mean? Let's say it is $10. 4 trades, it means you pay $40 to buy 4 stocks, and you sell 4 trades, $40. So each month, your expense is $80. Now try to see yourself. If you have only 2,000 or 5,000, $80, it could be a lot, depending on how much money you have. And try to see if there are other other brokers or other, because here in America we don't do stocks with banks. Banks, they are not for stocks. You should do, here we do brokers. Brokers, they pay the exchange money to sell the to send the orders, okay? And now most of the brokers, I think, they are for free. So you might think in the future, if this is good for you to find a broker in USA, and you don't pay a commission. That's it. And you will exposed to the biggest market in the world, which is USA. USA, we have 24,000 companies and mutual funds and ETFs. And each day, each week, we have hundreds of company IPOs are coming to the market. It means our market is becoming bigger and bigger and bigger every week, every month, every year. Our market is becoming bigger and bigger because America produces companies. People, they like to succeed. They make companies. When they are big, they need more money. They go to the stock market. People, they invest in these companies, and the companies become bigger, and then they become prosperous. See, for example, Facebook. Facebook began with $1,800. Mark Zuckerberg, when he was in his room with his friends, they don't have money. They all their money was $1,800. After a few years, it became an IPO. All of his friends, they become billionaires. You understand that? From $1,800, they become billionaires. This is America. It's the land of dreams. It means something small they can begin because the market helps companies to become big. In other countries, people, they have companies but they fail because the government doesn't help. People doesn't. There is no stock market, so the companies fail. They have no money. And understand that money for the first years for the company, it should be a lot in order to make things. Okay? How, for example, McDonald's have, let's say, 12,000 McDonald's in the world, or 14,000 or 15,000. How? Is it they have the money to buy all these locations? No, they don't. But the people at first, they help them. And when they help them, they make money. And when they make money, they can build every year. They can build 5, 10, 20. And after 10 years, 20 years, 30 years, 40 years, this number changed to become bigger and bigger and bigger. Okay? So, Jocelyn, I know you are new here. You can send me an email and we can discuss this about banks if there are other choices, because $9.99 is too much, I guess, in my opinion. Jocelyn said, also, if banks aren't the right places to invest, where is the best places to go? It's brokers. Discount brokers. Go to your to Google for your Canada and put discount brokers in Canada and see, because I don't know the market in Canada. And I don't know how things work in Canada. The tax, I think you have an account that it is free of tax. You don't pay tax, which is very good. We have here one also. It's called the Roth IRA. But to try to see, you can ask a CPA. It means the guy who do tax. If you have a CPA making your tax return, if you have like the same as in America, you can ask him, okay, what else, if it's not banks, what are brokers? And don't ask the bank. You call the bank and you say, oh, do you know other brokers? Because they will never tell you, because it's their competitor. Okay? So understand that. You should search, or you should see a community or your friends, or just ask. Because I don't know the Canada market. I don't know. So you just search. When you search something, you can send me the link, and I can check for you. I can check if it is good or no. But you can begin with your CPA. It means your tax preparer, someone who does your tax. These guys, they know better in terms of tax, of brokers, they can help you. Okay. Now, guys, it's 1:35 minutes. I have been speaking a lot. So, guys, ask questions right now. So, I will be waiting for you guys. Jocelyn, thank you very much. Welcome. You can send me always an email as you have sent me today. And you can search and send me links, and I will check for you tomorrow if God wills. If you don't ask, no one will send you links because you don't know. Ask friends, ask people who might know. The best thing is to Google. Anything you want to know, you just Google, you can find some information. So, guys, Robert, you say the stock Apple is very good. Okay, Robert, we have been trading this stock for a long time. In the subscription, we have been trading it for a long time, and we made big money from it. But understand that any stock can collapse at any moment. As it has an uptrend, it can have a downtrend. So let me show you the stock and understand. Apple is from the beginning of the year. When in 2018, in 26 December, I will show you this because I always show, but there are some new people here. So I will send you to the chart. You can see the chart. And you can check it. I will show you Apple. Here is the chart. Please follow me. Follow me here. Now, look. Here is what we call, if you can see this here, you see this big candlestick here? This is where I told guys that it is the beginning of the trend. Now here it doesn't show good because Apple, it has a problem. Some analysts, some stupid analysts, they downgrade Apple, so there is a gap down here, as you can see. A gap down here. But the market was strong, but just Apple would go down. And then each week I say Apple is good, but this in our subscription. Now, after that, after this, see here, from the 4th of January 2019 until we have the gap up, so from, in terms of price, 148, it goes to 210. We were here. Let's see here. Yes, I was here. I was here by myself, but I showed Apple to my subscribers. But at the time, I don't have the virtual account. That's why I don't show them any account. But I told them that Apple is strong until it collapses. Now it collapses here. So you see, it collapsed from 1st of May to June 3rd. It means 1 month. 1 month going down. So I told my guys that the stock is going down, so don't buy it. And then when it began to go up, I asked them to buy. Now we sold here because there is a big here a big what we call a big correction. We sold here, and when do we begin our yes, now we begin here our account. We begin it here. No, not this one. We begin around here. So we begin with the beginning of the downtrend. So you see, now you ask me, why do you begin here and there is a downtrend and you continue to trade? It's just because I told you before that I don't have, I don't have a virtual account at that time. When I have the account, I begin to trade, and then we have the downtrend. So we lost our money, some money, and then we make them back. But here we were there. And if you go to Golden Subscription, you go to this week's, you find that we own Apple and we make money from it. Now, you ask me, what is the thing? Now from here to here, we were here. You see that? You see this big trend, and you told me how to follow the trends. This is how I follow the trend. From the beginning, which August 6th, until now, we are still in the trend. So we bought it around 197. Now it is 297. So we have made until now around 50% of our money. 50%. Now all this, you will find it in my subscription. It means each week I will say where we are, what we bought, what we sold. So this is confirmed, and this is something that you can see. Now, if you ask me, will Apple continue? I don't know. It might collapse like this. It might collapse. It might continue. I don't know. For me, most of the time, I don't predict anything. If the trend is good, I continue. Okay? So from August 6th, so August, September, October, November, December, 5 months. This is to show you how to follow the trend, and this is training level 7, how to follow the trend. Okay? And this is a proof on how to follow the trend. I followed this here for January 1st to... Yes, here 4 months and here 5 months. But I was with Apple before here also. Try not to remember. I was here. Now all these is just because I follow stocks. It doesn't mean... It means I always follow and try to make some profits from stocks. Because I follow, because I try to assess and to assess the stock, and that's it. Okay. So let's go back. Robin Tijon say the stock up is very good. Good. Tony, you say finally made it to alive. Yes, that's good. But you come, Tony, you come late. It's 1 hour 44. We have about 16 minutes, and we close the store. Okay, so Tony, you can watch everything I said tomorrow if you have time. It's a bit long, but I just explain everything I want to explain. So guys, if you have some questions before we close, before we we stop this live, please ask. And even if you forgot, now, you can send me always emails and you can ask me, and I can answer you next time, or I'll answer you by email. Or if you are my subscriber in golden subscription or whatever subscription you are in, you can send me a question and I make a video for you. Because for me, the most important thing what I'm doing, especially with my subscribers, is that any question that you have, or you don't understand, or something that you are confused of, you send me an email, you explain what is it you are confused about, or something you ask, and I will make a video, a long video, to explain into details. And this is what I do. At least you know, nothing will be hidden from you from now. And this is why subscriptions are good. It's just for explanation. Okay? And for the guys, as you know, if you want to go to check the subscriptions, you just go and check, take a look. Maybe you get interested in one subscription and you can subscribe for 1 month, and then you see yourself. Okay? And I can put my email. It is always in the description. For guys, they always send me emails. But for you guys who are new here, always you can see my email in in the description. Here is my email. You can send me an email and expect an answer whenever I am online. I will answer your question. And guys, if you have more questions, ask, because I don't see any other question except for Robert, who speak about Apple. Now, we will see next week if the market is strong. We will see a big move in most of the stocks. But when I say in most of the stocks, it doesn't mean any stock and it is a winner. No. Some stocks will lose because mutual funds, they will sell them and buy others. That's why you see always, whenever you go, you will never find the same thing. Even in indexes, when you see index, it's doing good, like Dow Jones. Now let's go, because I didn't show them. Let's go to them. It's better, and I will show it to you. I will give you what's going on to the general market. At least you will have an idea. Okay. So please look. This is at least you will see. This is S&P 500. It's 500 biggest stocks in America. 500, and most of them are big. But the biggest ones are in Dow Jones. But now you see what I told you before. This is the 26th December I always speak about. You see, this is last year. This is here, what you see here. I'm just making this here, this line. This line here is 2018. Even here it is 2018, but 26 December. Now the market, when it was so strong, this is where I made my videos and my live. If you go here until 25 February, and then we have a downtrend here, and like a correction, and then the thing continues, and then the stock market goes down, and then it makes another trend, and then it goes down, and then It starts some, then it goes down. Now we have, and then the last thing, it begins the big trend. Now this trend is bigger than this one. Okay? It begins here. Let me see here. 3rd of October. It means we have 3 months here. 3 months trend. Now, you tell me, is it going to stop or to go down? I don't know. It might continue down, continue up into the next year. It means in January, February, March, it can continue, or it can collapse, the same as those. No one knows. So do not predict anything. Just follow. So this is Dow Jones. S&P Russell 2000. It's not doing that much like Russell 2000. It begin also from 26 December, and you see that all the indexes begin on the same day. Because mutual fund, I don't know why they begin in the same day. I don't know why. But day traders, when they see a lot of orders coming, buying, they buy. That's why it was the first. But understand that Russell 2000, which is 2,000 smaller stocks than the others, you see that Russell 2000 has not done that much. Because from here, if you can see from here, from this year, this date to this date, you see, it's the same. If you put 2 lines here, and when it go down, go up. So you see it going up and down, up and down, up and down. Now it's better. It's better than all this. For example, if you buy the ETF, it means if you buy IWM, which is the ETF, Exchange Traded Fund, it means if you buy the index by its ETF, let's say from 25 February 2019 to November 1st, you will make no money. You buy here on the top, you sell here on the top. All this from February to November, you make no money. You see that? But if you buy from here, from the 1st of November or 3rd or 4th or here, and you are here, you will see that you begin to make money. So it is not time that makes you the money. It's the trend that makes you the money. Let's say, for example, if you bought from here, which is training level 13, how to buy from support line. If you bought from here, okay, this trend that you can see, you will be making money more than from February to November. You see that? So it depends on when you buy. It doesn't depend on time. So this is about swing trading. We are only in times where the market is good. You should not be always in the market in all. You should. That's why we should search for good stocks that can go up. You don't just go everywhere and buy everywhere, or buy the ETF and wait. Okay, this is investing. This is not trading. S&P 500, we have seen it. Okay, so you see, although it does good here, but it collapses here like a downtrend, then the trend goes good here, it collapses here, and then it doesn't do nothing here, it doesn't do nothing, and then it goes up a little bit, then it goes down, and then the trend is good here, you see? So this is the biggest trend, and this is the smallest trend. This is the smallest trend. This is bigger. This is bigger, and this is the biggest. This is for the S&P 500. Now, if you go to gold, for example, gold, let's say from May 30 or 31st, it means from June. So from June to September, so June, July, August, 3 months. Now, 3 months we have an excellent trend. But from that time to here, it's a downtrend. Now things change. Things change, and you see that gold is going up. So this is how I know the trends. It means I follow. This is just the ETF, okay? This is just the index ETF. Silver, it has been doing good here, and then it collapses here, and then it goes up here, but we don't know if it continues to collapse. Okay? So this is just some stuff that I showed you. Okay? Robert said, I am in Tesla. Must I take profit? I think the stock will collapse any moment. I think we have seen Tesla last week. Yes, Tesla has a very good trend. I don't know. You should. The thing is, you should, if you want to exit, just put stop loss where you want it and just wait. Okay? If it continues to go up, just say. But if it collapses, you just exit with whatever price you like, because you decide. Okay? And you can see that Tesla was not doing, it wasn't doing that much from okay, see here. Tesla was not doing as the market. Okay? So here, this is the first day the market has been going up, but Tesla has been going down. So, see this, I will show you something that you can compare with. Here is 26 December that I told you is the beginning. See the downtrend? You see the downtrend? This is 26 December 2018. Now see Dow Jones. You see Dow Jones? Dow Jones is all the stocks are going up. But Tesla was going down. Okay? So you should always check your stock. But if you bought it here and you wait until you get the downtrend, this is bad. This is bad because the whole market was going up. Tesla was going down. It means there is a problem with that. But now the market, if you can see this, the market from here, it is so good. It might continue, it might collapse. So if it collapses, like here, so you should just put where you want to exit and continue. Okay? Even if the stock collapse a little bit, okay? Because Tesla is very big. This today is $12. Just little bit. It's $12. Tesla is very big stock. It's 443. So like this stock, like this day here, 297 to 328 is $31 in one day. So this stock is strong. For me, I don't buy more than $300. I don't buy. Okay? I didn't buy Tesla or Google or other stocks. I didn't buy them. Even in the past, I don't check them. I don't check them. When I see a stock is not doing good with the market, I will not buy it. And it was ugly, here it was so ugly that I will never buy it like this. All this that you see in my criteria, I will never buy that. Now I could buy this. I could buy this when see how the stock is so good when it is moving. It's not volatile, it's moving, there is a gap up here, it's good. But if you see the past was clumsy, zigzagging, going up and down. This is too bad. Okay? Now it is 2 hours. It's the end of this session. Let me see Shikar Sood. He comes just at... why you don't come in the... Shikar Sood, why you don't come on time? You come too late. We are finishing this. I have been speaking by myself for 2 hours. He said, should we buy stocks when the market is trading into a range, or we should sit idle that time? Now, it's better not to trade when the market is very, very volatile. I just showed Tesla in our market. It was not doing good. But if the whole market is moving, you should find stocks. You should find stocks that are better. Okay? So if the stock market is not doing well, you shouldn't just go buy and sell, buy and sell, buy and sell. You will lose a lot of money. You say it was night here. What's the time there in India? Now I think it's 11:02. I guess it's 11:02 or it's 11:10. How many hours we have to India? I don't know how many hours. So it's the time where we say goodbye or bye for next time. If you have questions, guys, just send me your questions, because or if you have some questions before I do the live on Saturday, you can send me your questions on whatever day, and you say, please answer this question, and I will answer it when I have it. And then, even if you are not here, you will find it in the video next day on Sunday, and then you can watch the answer. This is what I do always, but some people, they come and they ask questions live, and it's very good. Okay? So guys, thank you very much for coming, and hope next week will be a very good week. If it is not, you should exit your stocks if you have stop loss, and see where the stock is. Shikar said, volatile or market trading into a range. Yes, it's the same thing. It's the same thing. It means if a few days it goes up, few days it goes down. It means it's too volatile. It means there is no trend. Understand? Shikar Sood, why we are buying stocks? We are buying to follow a trend, not to stay 2 days or 3 days and then we sell. We are not day traders, and we don't day trade. Okay? Brandon Bernal, thank you very much. Hi, Ketos for next week. I don't know what's this Ketos and VWI or WW. I don't know what's this. So, but thank you very much, Brendan. Thank you very much, all guys here. It was a nice chat with you guys. Please, next time, try to have more questions. And then, if I see a lot of questions, I can stop doing the lesson, and we can just hang out. Thank you very much, and see you next week.